Good morning. The major averages, as we all know, had an outside reversal day yesterday. They fell on higher volume. That was above average on the NASDAQ. And the question is whether this kind of market action will lead to further and more significant downside, as it did on June 9th, when, if you all remember, techs were hit hard early on in our broadcast. And then we made note of that and acted accordingly. Reducing any long positions back to cash, and then potential shorts as well. These markets, as we know, they tend to baby step higher on QE fumes, and then all it takes is one day, or less than a trading day, for all those gains to be reversed in hard-hitting algorithmic trading action, also brought on by the institutions that are piling out all at once. And today we're seeing markets that are trying to find a floor. And it might be still a little too soon to tell. So far, the markets have corrected just a few percent overall in 2017, and that's a first due to this QE remaining at all-time highs, as well as the markets pricing in all the favorable economic policies of Trump's that they're expecting. But nevertheless, yesterday's action showed once again that you've got leading stocks that will get hit hard on days when the markets sell off. So you got to be quick to make sure your stops are set properly. They should always be set, and then if they're triggered, you're out.
Hey, Dr. K.
Yeah.
I wanted to point out a couple of things. I actually got short pretty heavy early in the day yesterday when the market was up, and I started to see everything reverse, and I went long the VIX, UVXY, and shorted some stocks, a lot of which just busted off of their peaks after reversing. But so far it's acting like a one-day wonder sell-off. And the one thing I picked up though over the prior 2 days right here is that you actually had volume up both days, and you were up something like 14 out of 15 days in a row, but you were stalling and churning up at the highs with volume picking up 2 days in a row. And so that looked a little bit suspicious, especially with a lot of stocks jacking. And then yesterday, everybody was talking about, oh, you have to own Amazon and Facebook and Netflix, and they're all going to go up 30, 40, 50% from here. I mean, maybe they will, but I don't think it's a sure thing. And to frame it that way struck me as a little bit suspicious. But you sort of had just this ebullience hitting the market, and it just set it up for a nice pullback. And who knows, maybe this is just a reset, and we see some movement into other areas, kind of like this was back here, and it could go on for maybe another 2 or 3 weeks. And I would say that if that does happen, you're going to get some nice little shorting blips here that you can hit on a tactical basis. So I covered all my shorts, what I had left. This morning I had a big position in UVXY, and I sold a chunk of that, most of that into the big streak higher yesterday. And sorry if I'm taking too long here, Dr. K, but I wanted to we were talking about this before the webinar. But you can see this is the move yesterday, and you got up to, or wait, I'm sorry, is this yesterday or now? I'm sorry, this is yesterday's move on the 620 chart. And you can see that we were talking about this earlier, right, Dr. K? And you got the MACD cross occurred early in the day here, and it actually coincided with a 620 buy signal at around 28.80. So when I see that, whoa, I don't know what happened there. When I see that, I'll go in heavy and just try to catch a move, and you get this nice parabolic move. The MACD gets into a big stretch, so you're selling into that, and you basically, I blew out almost all the position here, had a little tiny bit and held it, and then at the end of the day, they sort of sold it off just a pinch, so I actually upped my position again, and this morning we got a nice push back to the upside and sold into that on the MACD stretch and cross. A little early, but better early than late, and that was very profitable. But this is working on a short-term basis, isn't it?
Yeah, in my studies, what I've noticed is that in prior years, you had too many false signals trying to trade the UVXY in this manner. and was better to wait for the second day to pile on, or basically wait to the end, close to the end of the closing first day where the VIX is spiking. But of course, this is always in context of what it's done up to that point. And what I've noticed is that my success rate was about 55% going all the way back to 2009. And so when your gains are right, you're going to make at least 15 to 20%, if not a whole lot more. And when you're wrong, typically, I would allow some liberal moves in the UVXY because you kind of have to. But generally speaking, when I was wrong, the 45% of the time I was wrong, my losses were typically contained to less than 6 or 7%. So when you do the math, and you keep doing this over, from 2009 to 2016, you're adding quite a nice boost to your account in every year. This year, however, because QE has been on all-time highs, plus you got the Trump policies that are being priced in, the markets cannot establish any meaningful correction. And if you want to see this visually, you could look at a monthly chart of the S&P 500 going all the way back to when it began in 1957, I believe. So it's about 50 years.
Does mine go back that far? Let's see. We need to go to a, how do you go to a monthly chart? I guess we could do it up here.
How about any monthly chart will give you a sense. You don't have to go all the way back to 57, but if you just look at what the S&P has done, say, since 2005, you'll see that it tends to move back and forth as it goes higher. And even in a QE riddled year like 2013, where it really couldn't establish meaningful corrections, the banding in 2013 was still wider than it is this year. This year has been really the tightest banding we've ever seen, and this is up against last year where it didn't really move much for a few months. It was just stuck in the doldrums, and that was a very unusual pattern as well. So it's just a testament to how powerful QE is in this market, being that it still is at all-time highs, and central banks aren't rushing to reduce their levels. There's just Fed speaking about it at this point. I think that the U.S. Clearly, it tends to have authority and domination over what goes on around the world, and it's to the U.S.'s interest to make sure these central banks continue to print as they've been doing. And until there's enough evidence of an economic recovery, if these central banks were to remove the punch bowl too quickly or reduce the levels too quickly, that would ultimately hurt the U.S. market. And Bill Gross, the legendary bond fund investor, has written a lot about this topic. He said that their hands are pretty much tied, that they really, unless this economy really starts to turn around, these central banks have to continue to print. And that's, these economies, global economies, including the one here, are still not out of the woods. And, these figures and statistics that we've seen, government prepared statistics are biased. We all know that. So I think the Fed knows that too. Therefore, they want to keep the QE party and the spigot pumping at full mast. And that's how far down the road can this can be kicked? They've been kicking it for a number of years now.
Well, as Gordon Gekko said, tell me something I don't know, pal. It's my birthday. It's actually not my birthday, but
yeah, it's
anyway.
It's like a broken record. It's this whole thing has been talked about for years, and the question is, when will this bubble burst? Because the bubble keeps getting bigger, and we all know that bubbles can get bigger and bigger before they actually finally burst. Usually, they might exceed the expectations by a couple of years or even more in some cases. And since this is more of a central government handled situation, they're going to keep this going for as long as they can. So here we are.
There will be no exit. So, but
yeah.
We can talk about that all day long and waste time talking about it. But the reality is, what do you do in terms of trading stocks? And I think that yesterday's action shows that when things start to get a bit frothy and you've got some nice profits, you can think about selling into the upside move. So you had, you know, Facebook gaps up, and to me, would you buy this as a buyable gap up? Personally, I wouldn't, mainly because it's occurring after a sharp upside move here. So it has more of an exhaustive look. So actually, yesterday I was looking at this as potentially a short sale, and sure enough, you had a nice cross up here right at around 176 in here, MACD stretching cross up here, and so it started to look like it was rolling over, and it looked like you could short into that move. And that actually would have worked, or did work actually, and the stock it went all the way down to 168, almost unchanged. Now it's trying to stabilize and going back the other way. But it definitely makes it, I think buying into this sort of a BGU is a little riskier. What's your take on that, Dr. K?
Well, I think I mean, unless the markets just start to go higher again, at best it's just going to go sideways. This could still go sideways even in an uptrending market, because look what it did from April all the way into early July.
Yeah.
Go anywhere, and you know, it's got a market cap of $500 billion right now. You know, I don't think there's a whole lot of fuel of upside in this kind of name. I mean, ultimately it's a leader and it's going to get bigger. I think it eventually could become $1 trillion company, but I think that's going to take a while to get there. And you're better off, especially if you like faster moving names, to stay out of names like Facebook. And you know, we have a lot of these types of price formations, like the undercut and rallies, especially after what we saw yesterday, that can work to your advantage, especially because the risk is very low. If you take a look, for instance, at Light, that one had it undercut its prior price formation and also undercut the 50-day, and so you don't necessarily want to be taking a position in anything yesterday, because that, you know, yesterday's action could easily lead to a second day down, as it did after July 9th. So you want to be cautious. Maybe if you did take a position, you take a small one, and then today it's you know, it's up from the 50-day. It's still in buying range, but that's if the dust clears. You know, it looks like the markets are finding a very shallow floor already, and you know where your exit point is in this. So your risk is very manageable in these types of formations. APPN is another one. That one yesterday is just barely undercut the prior low, and then finished at 1970. It finished up what 1.5% from the prior lows, and then today it undercuts. So you know, if you had established a position, you'd be out of it today. Same with some of these others like Yext. Yext was it undercut and then rallied, but you have to catch these really fine. You know, the low on the prior low was 12.88, and this thing went down to 12.86.
Yeah, I actually bought a little the other day at the 20-day exponential, and it sort of looked a little feeble on Wednesday, so I just punted it on Thursday morning. But yeah, if you come in and test these out, you definitely have to be nimble, and you have to stick to the selling guide, otherwise you will get caught. Or you
Yeah, so I mean,
caught,
yesterday, if you happen to catch it right around 12.9, I mean, real fine tooth like that, 12.95, then you realize, you know, your risk on this, having caught it just about right, is less than 1%. So even a day like yesterday, if you catch it right, you know, now you're up how much? You know, now it's up to 1310. So, you know, on a percentage basis, you know, you're doing pretty well. That's like
you undercut these lows over here, a couple of these lows. I actually own a little bit of it right now, so I'm long that. And another one I'm looking at is Irobot. Had a gap up move and sort of tightening up in here. So there was a guy on TV on Wednesday babbling about how this is a short. I guess he was saying it was a short all in through here, and he turned out to be right for a little while, but now the thing gapped up on their earnings report. But he was going on and on about how the earnings report is phony, and I just thought, okay, I'll watch it and see how this thing acts. And I actually did try shorting, and I was able to pick off a couple of bucks on it, but I noticed as it comes down to 103, 104, there is a bid in there, and the volume's sort of drying up. It's actually going to run above average at the pace right now, but it's hanging in there pretty tight, just above the breakout area. So I'm wondering if this one is going to confound short sellers and turn higher. So that's one that's working. What are the other names? ANET is that's not looking so hot. I don't like that at all. BABA, that's another one. That's got reversed pretty hard yesterday off the highs. Now we're back up. I think are all the Chinese stocks moving today? No, yeah, slightly.
Well,
Because Baidu's up big.
That had a gap up on earnings.
Yeah, and that thing's hopping and bopping, and I guess just what it looks like on the weekly chart. So it's coming out of a low base formation and trying to head back for the old. Are those the old highs? Yeah, those are the old all-time highs. So it's trying to come back, but I think that just shows you that the Chinese stocks remain a force to be reckoned with, and they've done pretty well. I know we've had the one that we've kept BABA on the list as a big cap one, but also this Baozun, and you can talk about Weibo, and you can talk about Momo, and Momo's doing okay, but the bottom line is among the smaller ones, Baozun is the one we've kept on the focus list, and that's the one that's been ripping it up. I mean, that thing's up 50% in the last month alone. So pretty much. Is that right? Yeah, that's about right.
Yeah, all right. More than that, actually.
And we try to be selective. It doesn't always work out as well as you'd like it to, because you're trying to sort through so much stuff. But I think in general, the Chinese names continue to look pretty strong. I don't know, as Netties are looking grim yesterday. See, I don't know if I like this one. It looks funky, but in this market, funky things can work. Cena, I kind of like Cena. It had a nice flip out yesterday. And what was weird about yesterday? Did anybody, you guys probably all noticed this. It just seemed like all of a sudden everything was getting tossed, and they're just tossing it. Because I know I was playing Cena yesterday and the day before, and I got out close to 94 where I entered, right along the 10-day line the day before on Wednesday. And I'm sorry, actually on Monday morning. And it didn't hold. I'm sorry, on Thursday morning. I'll get my days straight. What day is it anyways? It's Friday, right? Yeah. Anyways, so it didn't hold, and it got whacked really hard. And it looked like it was death, about 2/3 of the way through the day. And then it found a support at the 50-day moving average, and now it's trying to trek back up. And this looks like it might be okay. I don't know. But you had to be opportunistic and sort of step in and buy it near the 50-day and then use that as your stop. But, I'd emphasize that you have to use it as your stop, because sometimes they don't hold. And if they don't, and this market ends up in a real correction that's serious, like something we had last August of 2015. And when's the last time we had any kind of a serious correction? I'm trying to think about this.
Well, the last time was in really January of 2016.
Yeah,
when you had a
we might be due for one. So the thing is, these things are coming down to support. And you can see how in Cena's case, and there's a bunch of others, I think, like if you look at Netflix, which is still on our list, it found support around the 10-day, and it's trying to rally, but it's way up there. So it could eventually meet up with the 20-day. That's what happened to Nutanix. And it met up with the 20-day and undercut the BGU low over here. It's 2062. I had 2162 on that low. But it had like a 10% move in just 3 or 4 days. And for my money, I'll sell into that. No questions asked, and then try to buy it. Because the other thing is it ran into the 200-day line. You can just barely see it showing up, the 200-day moving average. So that was clear resistance, and let it come in and set up. I thought it might set up along the 10-day, which would have been very positive. But a lot of times these things get enough upside momentum in the short term that they kind of get blown off a little bit. It's a bit of a blow off on the upside. So the pullback will be, if you measure it from here to here, the pullback 50% would take you to the 20-day line. That seems about right. So I wouldn't be averse to stepping into the stock here, using the 20-day line as a tight selling guide. So, but I think you have to be opportunistic in this market, and you have to be fearless, and you have to be quick, because if they don't work, and one day we're going to get a big sell-off, and if that happens, you want to be out of the way fast. So I got a couple of questions from Scotty. Hey, Scotty, nice to see you back here. I don't think, were you here, or maybe it was a week before, maybe you're on vacation or something. But what's the first one? You're whining about, I can't trade the UVXY, just watch the stocks. Well, maybe you can't trade the UVXY, but I can. And I can tell you one thing, it's pretty damn profitable when it works. And I worked out a pretty good system for being able to come into it on an intraday basis using the 620 chart and then hopefully catching an inflection, even if it's just a small one, and running it up for a big gain on the day. And let me tell you, that helps on a day like yesterday. And if you're trying to hold on to long positions when that happens, a small amount of the VIX, the UVXY, will go a long way in terms of helping to hedge the madness that we saw yesterday. So I don't know. I guess if you're a broker at somewhere like Merrill Lynch or UBS or wherever, they don't let you trade a lot of those ETFs, but that's why I'm glad I'm not a broker. Anyways, we must be near a top. I've had clients asking about Bitcoin. Possibly. Last month I was at the hairstylist, and the woman was telling me about a guy who had just come in and he had borrowed $70,000 on all his credit cards to buy Bitcoin. So that was a month ago. I'm going to say late June. And
Yeah, you know,
late June would have been right around here. So the guy's roughly even, but I don't know if it's a market top, but maybe it's a top in Bitcoin. What are you about to say there, Dr. K?
yeah, well, I mean, I've been involved in this for years, and there's been so many of these mini bubbles. They're inevitable. Count on them, because when Bitcoin has a run, it tends to run furiously and fast. And so, you know, the mini bubbles don't indicate a major bubble. There's no major bubble in Bitcoin. There never has been, which is why $1 in 2009 is worth about 3 million today. It keeps going higher ultimately because the utility behind it is beyond what most people can conceive. And as far as a mini bubble, yeah, I think it very well could be undergoing a popping process, so to speak. Right now, wouldn't surprise me. I've been through about, I've been through 4 of those popping processes, with the prior one taking 3 years to complete. The prior one popped in January 2014, and then it wasn't until this year that it reached old highs again. So yeah, this type of action is very common. I think though that this time the latent period, the base forming period, might be shorter because you have more institutions getting involved finally. Even governments are starting to utilize the technology to their advantage. When I say Bitcoin, I mean the blockchain technology, not necessarily Bitcoin. But what benefits blockchain ultimately is benefiting Bitcoin. Bitcoin is like, consider it like the Amazon of crypto technology.
Okay, anyways, where were we? Oh, let's get back to some of these stocks. Applied Opto is pushing up against the $100 level. They've got earnings next week, so I'm not sure I'm going to do anything here. Notice how the 100 level served as resistance, and sometimes that can be the case where the century mark serves as a point of resistance. And if you go back, I think stocks like Data and Workday and even FireEye might have run into resistance at the 100 level way back, maybe 2014, sometime around then, and then they all topped out at that point. So there is a potential for that to occur. But I think, this thing's had a big run. For my money, I'd probably take at least half off the table here ahead of earnings, maybe the whole thing. I would be probably more inclined to just take the whole thing off myself, but that's just me. Arista we looked at already. That's not looking so hot, but they come out with earnings next week. I think I'd just be out of it. Appian also supposedly came out with earnings today, but did you see anything? I didn't see anything. It's Friday too, so it's not likely that they would.
I haven't seen anything.
They're probably going to be coming out in the next few days, but I think you sell into the breakout. You could see it stalling up along the highs, and now it's coming in. And if you look at this visually, I've got a few tops in here, so this looks more like a logical pullback point, 19. So it may be viable in here. I don't know, but it looks okay.
They come out earnings August 3rd.
Pardon me?
August 3rd is earnings.
Yeah, so next week. So there's probably nothing really to do, and that's the case with most of these. Baba reports earnings next week after next, so they're doing okay though. The stock's hanging in there, and we put it on down here when it was close to 100 early in the year, so it's had a 50% move from there. And then Baozun, I already talked about, is just streaking higher. And let's see, you have Light is it undercut this low like you were talking about, Dr. K, but it's not really getting any thrust. Earnings are next week, so I wouldn't be doing anything with this personally. Netflix, I think, along the 10-day line. Is that where it's at? Yeah, I don't know. I think it may need to back and fill a little bit more. You notice, so we talked about this last week, when it's had these big gap up moves, it tends to not go very far right away. It's very kind of trudging, and it did that back in May, late April into early June, and it had this gap up here. I think that was on earnings, and it just kind of trudged higher, and then it gives up all its gains in 2 days. Lovely, huh? So if we do that again, maybe it'll break down to the 50-day line in 2 days if we get a sell-off. You know, that's the danger of this market, is that can happen. And I think it can happen with pretty much any stock. So you got to be wary. So
pull up something like pull up Yandex, YNDX.
Yeah, they came out with earnings this morning, and see.
Right. So like yesterday, you wouldn't want to be taking advantage of that Wyckoff undercut, because then today they're gapping lower on the earnings report.
Because I went hold it through earnings myself. So, but I mean, these guys were up because of news about Uber, and that seemed a little bit artificial to me. So, I mean, we pointed that out last week, that it's a little cautionary, and there probably wasn't much to do with this going into earnings anyways. So now it's just, we're going to yank that. That's going to be yanked off the list for sure. Anyways.
Yeah, but also I wanted to mention about something like, Light. That one is still playable. The nice thing about the undercut and rallies is that they can give you a spring, very quick trade in a matter of 2, 3, 4 days.
Yeah.
You're several percent. And the earnings on this thing's not coming out till, I think it's 2 weeks from now. It's not next week. So you have a number of trading days to actually play this ahead of earnings. And so, I would just be mindful of any companies you're in, of when they report earnings, and to be out of the position or reduce the position the day before they report.
Unless you have a huge cushion and you want to sit through it because you're a mojo man.
Kind of like that. But I know that, like, I think I just didn't want anyone to misunderstand. Like, if a company's reporting earnings in 5 days, it doesn't mean you can't buy it. I mean, if you think you can get a quick 1 or 2 trade, go ahead, because some of these formations that as we've seen this year will yield double-digit gains in 1 day. Like Amyov did twice, and more recently we had. Well, it's just there's so many of these that Yext went for 6 days straight, up to 14.5. So you got some nice moves in a short time.
Yeah, and I bet you this is probably the spot to be buying Yext again when it doesn't. It looks unappetizing if you use traditional technical analysis, because it's broken the 50-day line, but it's skidding along. But what we know is that from Wyckoff is that an undercut of lows in a prior consolidation. And I guess, what's this low right over here? This low is 1288. So you're 20 cents away. To me, that's like moot. I'm long this thing right here, and I'm willing to take this with using yesterday's low, 1286, maybe as a stop. But I'm not huge in it, but I think the position is maybe.
Yeah, your risk is only about 2.5%.
Yeah. So, Scotty, why do you keep asking this question? Didn't you ask this last week? Are there any public companies involved in blockchain technology? That's a little bit, as Dr. Hay said last week, that's a little bit like asking in year 1999, are there any companies involved in the internet? So, I mean, there's a lot of companies, but that's not the differentiation. Like, we do blockchain, so that means we're going to become $1 million stock. I don't really think it works that way. So I don't think there's anything really public. So anyway, so hopefully that answers your question for the final time, Scotty.
The other thing is, it's probably not from this group, but I get a lot of questions daily, and I don't have the time. I just don't have the time to be answering them. So just please refrain from asking me anything involved in crypto
what
technology.
We should do is start up a company called blockchain.com. Yeah, that would do it. And then we could go public. We'll start out as a shell company on the Vancouver Stock Exchange, which is notorious for its shell companies. And we could promote it. Just think we could make a ton of money that way. Anyways. Now, ServiceNow, they came out with earnings yesterday or the day before, and they beat and they gapped up and they ran up. Well, they didn't gap up much. Well, no, they did. I take that back, because you can see the little notch right there, the tick mark. gapped up but closed. They're actually shorted this one yesterday and made some money, a little bit of money, nothing huge. But notice how it's trying to hold up and the volume's drying up. What's your volume rate on this? Minus 44% right now. This might be a long right here. You know that? If this market holds up. And the thing with yesterday's action is I think a lot of people, because everybody's talking about the market being too complacent. So, you know, the only thing we have to fear is the lack of fear itself, or something like that, to paraphrase Franklin Delano Roosevelt. So, you know, everybody sees yesterday and it feels like everybody pounces on the short side. And to me, I think in this market, what I'll try and do is catch an inflection point when I see it. And I use the UVXY, and also in combination with stocks that could be reversing, like yesterday was Facebook, there was ServiceNow, there was a whole bunch of them. And all you had to do is just spray them and they all came in very nicely. But this could be setting up. So this may be viable here.
Yeah, I mean,
and your stop is 108.66, so your risk is tight. What was that you were saying, Dr. K?
On a day like yesterday, where the markets are coming apart, and this one, you know, naturally is going to get pushed lower just by virtue of the general market action, but it was still able to close higher on the day, and, you know, roughly mid-bar. So that to me is a sign of strength in the name, and the pattern leading up to that also is, you know, relatively constructive. So yeah, I wouldn't be surprised to see this one move higher from here if the weight of the market comes off. And it's one of those cloud companies too that are involved in. I mean, I think we've talked about this one, but it helps businesses optimize their functionality across many levels. So it's quite a useful company. It's an $18 billion company, so it's I would say it's one of the leaders in its space. But it doesn't, you know, it's not really a fast-moving company either. It tends to back and fill when it does move.
I don't know. It had a nice move back here in April through early June. That was nice. Gave up a chunk pretty fast.
That was the only time it's done it in its pattern. So, you know, you got to be mindful of. What's nice about that move, actually, though, was really clean. It didn't violate the 10-day once. So, you know, you could watch for that and use the 10-day as a guide, because, you know, or if you get a big one-day move or two-day move in this thing, like in January, you know, it tried to gap higher and then close at the low on the gap up day, then you just sell it. You take your profits. You know, quick profits in 2 days. It was what? That was about 6% in 2 days. So
not bad. Let's see. Take two. This is actually another one that I bought here off of the lows of the day this morning, and it's up off the lows, holding the 10-day line. This got whacked. Notice they came out with earnings on the 7th, so I'm hoping to get a move back up into the mid-80s before then, or it may just be a day trade. We'll see what happens. Depends on how things close. But this is acting okay. If you look at the volume on yesterday's break, it was about just a pinch above average, so nothing serious. And the stock had already had a move, but it was last viable when it regained the 20-day exponential moving average, I believe, right here. And then we put out a focus list note on this day here because it was sitting there nice and tight and looked like it was getting support to me. So that bopped, and again it became viable on this pullback. Notice here you have the volume drying up here, so that looks pretty good. So that's acting okay. You know, I can go through individual stock charts and they look okay even after yesterday's hit. Where they look okay, I'm interested in perhaps taking a position on a pullback with the idea of using a very tight stop. I notice Nutanix is trying to pitch a little higher here, 22.10 right now in the last print, 22.06. So that looks kind of interesting, you know, here. So we also went through Yext and Yandex. Vive is another one. Somebody asked us. Somebody sent me an email. And I'm going to ask you guys, anybody, please don't send emails directly to our personal emails. Send them to support. Is it support@virtueofsalvageinvesting.com?
yeah.
And so we'll get it. You know, that way we can screen it. Because if you're not a member, we don't answer emails at all. I don't know if anybody slid in there before, and we don't provide personal investment advice. Somebody will ask me, you know, how would you handle Viva on the sell-off? Well, I actually had some of it on Monday. on this move, buying it here on the voodoo pullback into the 20. I sold that, so I didn't have to worry about this. Now on the pullback, I'd maybe be looking at buying it back. But I'll work stocks that way, coming in, going out, coming in, going out, and selling into the upside moves, and then trying to catch them coming back, or if they hold tight. And that's how I'll play them. So I don't even have to hold them overnight in a lot of cases, because they will be continuous and set up for you again. So, you know, coming in here, that to me, you're coming up to the highs. Sell it because it's probably going to back in a little bit and give you another shot to buy it, especially if the market gets in trouble. So that's how I avoid that. Now, you know, if you're using a moving average, then you got to decide if it's a 50-day. And I was a little bit surprised that somebody would ask me a question like that, like, how would you handle VEEV now? You know, well, I already sold it. I sold into the strength. So, and what are you going to do? You're going to do what I did? But you can't now because I already did it. So it's kind of a dumb question. And then what happens, what I realize what it is that somebody has a situation where they get hit with a stock that they own, and they're a little confused, and they want someone to tell them what to do. And I think that's really a bad habit to get into. If you're confused, then figure out what you're going to do in a hurry, and then stick to that. So if you tell yourself, well, you know, I'm a little concerned here because it closed just below the 50-day line, and the volume was heavy, and I have a big position. As I'm like, okay, then if you sat through this bounce and use that low as your final stop, and if it busts it, you're gone. But notice how to sort of undercut this low here and rally back up. Or you could just use a violation of the 50-day moving average. So it's almost like, and this person apparently read our books, but okay, what would we use as a maximum selling guide? Well, a violation of the 50-day moving average. Do you have that in Viva as of yesterday? No. So the question answers itself. And it sort of confirms to me, and I guess, do I hate to say it? No, because it's the truth, is that most people who invest in the stock market are just too stupid. And not in the sense that they lack intelligence, but they're just too stupid in the way that they don't go about it properly. They don't, number one, they don't develop the ability to assess information and make decisions thereby. And they don't have the ability either to, or rather I should say, they don't have confidence in their own decision making. But again, I would say you're going to make a lot of mistakes. So making mistakes, it's okay. The trick is knowing what your out point is if you're wrong. So, you know, and too many people, they want this certainty and they want to rely on other people to provide some sense of certainty or comfort or whatever. It's like, you know, I'm not passing out security blankets. Figure out what you're doing and figure out what your sell point is and then stick to it. If you find yourself being indecisive and needing somebody else to tell you what to do, that's a big warning sign. Anyways, let's go through some names. Oh, somebody emailed us about this one. And okay, here's the other dumb question. It's like, what are your thoughts on Ultra Clean Holdings? Well, if you guys remember about a month ago, and you can go back and look at the video, I think it's exactly a month ago, we didn't really care much for this stock because it looked like garbage. Okay, you had this big break off the peak on heavy volume. It was breaking all the lows. It tried to undercut the low here and rally, but that just failed and it went lower. So it's looking like garbage. But if you go back and you look at that video, you will see, or you will hear, well, you'll see too, if you're looking at the screen, that I basically said, who cares what we think? You can handle this in a concrete manner. If you like the story, then you can use this low as an undercut low. So and it was down here at the time of the webinar, somewhere in here. It could have been late June or early July, I forget. But you can go check those webinars, the videos, if you want. I'm watching Irobot now going over 106, so that looks pretty good. Take Two is moving higher now, only down 21 cents. Another one I'm long here is Twilio. I'll talk about that if you guys want me to. But you know, the thing here is evaluate this. You know, asking us for our thoughts is another indication that whoever's asking this question is just kind of dumb, or they're just so new that they're reverting to this impulse of when they're a little confused or something's worked out, they need our opinion. But back here you didn't, as I pointed out. I said in that video or in that webinar, if you undercut this low and you rally back up through it, you just buy the stock and you use that low, prior low, as your stop. Forget about what we might think, or you might think, or someone else might think, or some guy on TV. That's a concrete trade at that point. You undercut this low, you buy it here, and boom, that would have worked. So that's all you need to know. Now you're up near the highs, so what do you think is going to happen up here? You come up in about a 2 or 3 week move, well, a 3-week move higher, and that's a pretty good gain from 19 along the lows, 19.20 to 26. That's 30%. So do you think you're going to run into a little overhead up here and maybe some profit taking from anybody who bought it down here? Yes, that would be logical. So, you know, you get some heavy volume here. It's peeling off the top. I'm making a mess on the chart now. Let's clean it up. And it finds support here at the 10-day line on heavy volume. So it's trying to set up in here, you know, but earnings come out. When do earnings come out on this one, Dr. K?
Earnings are, now this app is really annoying. Now it's taking my keyboard away.
Well, let's see, UCTT. But, you know, this is one has acted pretty well, and it was a very concrete trade on the undercut and rally move, and I coming up to 20, and I told you about it. What's that?
It's supposed to come out today. It's supposed to come out today.
So did they?
Not yet. Maybe after the close.
But it's Friday. That can't be right. Let me see. Anyways, so let me just get back to basics. You know, work on your ability to recognize an undercut and rally setup when you see it, because when you see it, it's actionable and it's very easy to handle because you just use the prior low as your stop. Pretty simple. Not too hard. Let's see. Plus, well, it was up earlier. Ultra King, the target raise, blah, 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 blah. Now, don't see anything. Okay.
Actually, you know, it's the questions. Some of these questions that that we get, and at least I'll say this: the questions we get that we can answer on the webinar, but not in an email format, are generally pretty good questions. However, I would say that outside of this format, on some of these other sites, you know, where I don't really entertain the questions, I would say that there's a saying that I think it was Edison who said, there's no expedient to which a person will not resort to avoid the real labor of thinking.
Exactly.
And I think,
that's what people are doing. Yes.
Yeah, they want the easy answers. They want to be spoon-fed. But this is very true outside. You know, I see this all the time in other places on the internet. And I just think to myself, well, this is, you know, these people are ultimately going to lose money in the end because they're not learning the craft. You know, they're not learning a strategy that works for them, and they're just, you know, looking for the easy answers. Anyway.
Yeah, so I mean, I get pissed off when I see something like that, and I guess that's what makes me a bad teacher, I guess. I mean, I can write about things and teach people that way, but probably one-on-one coaching would not be my thing, because I'd probably be beating people over the head, and they may end up physically hurt if I'm holding anything in my hand. But that's just me. Anyways, Calpine, someone's asking about, what do we need to tell you? What do you need to know? Do you want to buy it and have us bless it? Isn't Calpine just an energy company? So it looks okay. Oh, look at Yext all of a sudden is going up. 1325 on the last print. I'm seeing a big streak, 14,000 shares going by on the 5-minute chart. What are you guys all jumping in and buying it here? Let's take a look. Here's Yext. I love the name. So there it goes. Maybe someone's going to buy them. Who's going to buy them? I don't know. I'm just BS. Someone says, you are a great teacher. I think I do better, though, Joe, but through writing. Because I enjoy writing, and I don't know. I guess I'm kind of a, what was it, Gordon Gekko? The thing about wasps is they love animals and hate people. So I guess it's the wasp in me. So anyways. I hate people. Okay, blah, blah, blah. Somebody said UCTT reported yesterday after the close via briefing. Okay. Okay, let's go to some other stocks. FN, Fabrinet, they come out with earnings in the latter part of August, holding the 20-day, but they're going to move in sympathy to AA, OI, Applied Opto, and Lumentum when they report. Let's look at some of the others, like Weibo is hanging in there. That's acting okay. Cena is coming right back. Look at the way they just pummel it yesterday, and it just comes back. So, you know, I think if you're running really heavy concentrated positions the way I do, I run with them hard, and so I swing trade them. If you're trying to sit with smaller stuff, you do have to give things some room. And in this market, you know, that works out because a lot of times if you're able to build up a profit cushion, you can sit through a normal pullback. So you can see that Cena, for example, had a big move. And if you bought down in here, because this was starting to move back when Momo and Weibo and Cena, and Baba and all the others, Baozun and all the others were running higher. And so it has a big parabolic type move, and it sets up in a base. So it pulls back, meets up with the 50-day line, sets up, and it's setting up again along the 10-day, 20-day exponential. I think earnings come out when for these guys, Dr. K? We could always go to the handy-dandy.
Here, Cena is
8/14.
August 14th.
Yeah, so, okay. I don't know. So anyways, I was
That is all right, but I noticed when I really need it, that's when it bugs out, which is very strange. It's like it knows my intentions. But anyway.
Huh. Twilio, I don't know.
Data still is the problem, so it's still a little buggy. But yeah, it's strange how it operates on that basis.
Somebody says, somebody's asking, what was the Bitcoin ticker you were showing earlier? It's BTC. Great Bitcoin. Anyway, somebody says, you teach like they used to when I was growing up. None of my classmates ever got a participation award. Okay. Yeah, I remember teachers could be pretty brutal at times. Let's see. Regarding Cena, I believe that it owns 65% of Weibo, so kind of like a proxy for Weibo. Okay, I like that. Thanks for that information. That may be why they look the same. Notice that? So they both look okay, but they're coming out with earnings soon, so I don't know if I want to be playing. I like Yext. There goes Take Two now. It's up a penny. It's turning green. I like Yext because they don't report until the end of August. So basically what I do is I look at my, let's look at my current watch list here. And what I'll do is, let's get rid of my filters. And you can see over here I have an earnings due date. So what I do is I sort it based on the furthest away, and then I can go through my list. Here's Shift Pixie. Now this is interesting because it looks like it is undercutting the prior. It undercut the prior low. You guys see that? Maybe we'll just go to this. Whoops. I'm getting sidetracked. But you undercut the IPO low, which was $6. They offered it at $6 a share. And it's trying to undercut and rally. This prior low is 630. So right now you're trading right at 630 on the bid. So it looks like it could try and turn here. They don't come out with earnings until, what, September or something like that? So this may be a spot where you could pick this one up. It's thin as hell, though, but I think, what's the average daily volume?
It's really low.
881,000 shares, it says on here. That's probably a little bit skewed, though. But
that's a distorted level because it's only been trading for a month.
Yeah, but that's, that's something to keep an eye on.
Real average volume is probably going to be like 200,000 on this thing.
So let's go Miomo. That's another one that might be setting up. They come out with earnings, though, supposedly any day. I don't think I've seen anything yet, but it's undercutting the lows here in the pattern. Maybe you guys can see that. Here are the lows. It's undercutting that, so you're getting a little bit of an undercut. If you rally back through it, maybe after earnings or something, it could be buyable. I don't know. We'll see. But that's the type of thing I'll be looking out for in this market. Let's keep going through my little list. So I'm basically going through Solaris. This is another recent IPO. It's an oil stock. Oil stocks can't decide what they want to do, but a lot of this is all dependent on what the USO is doing. So, and it got back above the 50-day line, and that's the crude oil price, and you can check the crude oil futures. They're doing the same thing. They've moved through the 50-day line. Notice how they broke below a few days ago, late last week, and that sent the oils crashing back to the downside. Now it's going back up, so it's leading the oil stocks around by the nose. And so that brings to mind, names like Frac, which reports earnings, I guess, on Monday, and Jag, which is back up near the highs. But these are tough to play, so I don't know. I think I can find other things to mess around with if I want to try and make some money on the long side. But anyways, but you can see we're going through this. U.S. Steel looking like garbage. It looked like it was going to turn. Facebook report earnings. That could still be played as a viable gap up. Fortinet blew up after earnings. Innoviva, a little gap up move after earnings, runs into some overhead from the other side of the pattern. You guys can see that here perhaps. I think this is an interesting story. So you run into some overhead here. You got a viable gap up. The low here is what, 1350 or something. Maybe that's viable. It's relatively 663,000 shares, relatively thick. I'm just going to run through this list because I think there's some interesting stuff on here. Biogen, maybe in a viable position as it pulls into the 10-day line. This excess, this may be viable in here. I like this story. This is the, is this a company that they do the Get Go Gone colon cancer tests? Yes, am I right? Somebody, I think
Excess, they're doing the colorectal precancer.
Yeah, so that looks pretty decent. It looks like it could be viable here using the 20-day line as a reasonably tight stop. And earnings are not due till October. So here's Fabrinet, Facebook. Did we go through these already? What happened here? FireEye, What's this? First Solar, is that a viable gap up? I don't know. Fortinet we looked at. Let's see. FCX. These guys just came out with earnings. They're kind of slumping. Gaming and leisure. Glaukos reports in the next couple of days. Is this correct here? Something's goofed up. Sorry. Yeah, here we go. Okay, I like the now looks okay, you guys. So I don't really have an issue with it. It looks okay to me. It's just metadata. I don't know if that one is viable here. I think Viva is a competitor, I believe. And Viva is probably the better name to be looking at here. Here's Vertex. McDonald's pulling back to the 10-day line. Maybe that's viable. Nutanix, I like it here. I'm long it here at the 20-day exponential. Adobe Systems, Cloudera, this may be viable long here along the 20-day line. This was featured in a Voodoo report back when it was trading down here, and the stock had a nice move, about 10%. Now it's backing in. Earnings don't come out until September the 14th, so that's one to definitely look at. Broadcom come out in September. Okta, don't really like this one. Palo Alto Networks, not until the end of the month. They're right at the 50-day line, so maybe that's in a viable position. I think a lot of this stuff is touch and go, though. So if you're buying them, you know, the market could still roll over, and I'm not even sure if any of these positions I'm owning right now, I'm actually up on them and making money, if I'm just going to bag them and go to cash over the weekend, because I think there's a lot of weird cross currents that could show up. I don't know. Anyways, so you can see there's some stocks that look interesting, and they've already announced earnings. And I think there's more than a few ideas in there. Let's see. Any last questions? I think we're going to wrap it up here. Twitter's garbage. QTNA, these guys come out with earnings, I think, in the next few days, so I'm not going to do anything with that one. Any other questions before we wrap it up here? So, you know, I think you can look at the setups, and you'll see setups in real time. You see the undercut and rally moves. You see stocks pulling into areas of potential support. I think you can test stocks on those pullbacks, but I also think that you need to be very quick and ready to exit if they don't hold support. So the market could be set up, you know, like it did back in June when it corrected hard off the peak. So you basically might just be looking at something like this, where you come down hard and you bounce around, you rally, and then you break again. So you could be in a situation where you just do this throughout August, which could set up tradable moves on both sides, both long and short, but they're going to be tactical. So meanwhile, if you're holding stocks for longer term moves and you have wider stops for example, along the 50-day moving average as a maximum selling guide, then you can just stick to those. But I would say make sure you know where your out points are if things don't work out, and be ready to run for cover if the market doesn't pan out, because I think you're in a phase where anything could happen. You've got the Republicans failed to pass any kind of Obamacare repeal, and that might have been a disappointment for the market yesterday. That might have triggered the sell-off. And so, now that that's out of the way, you might now start to hear talk of tax reform, but even that's not sounding so appetizing. They're talking about raising taxes on the upper income and then eliminating the state tax deduction. So for someone in California like me, and I pay a lot of taxes, I'm just going to get screwed. So I'm almost thinking about just capping my income every year, Dr. K. If I'm only going to make so much, and once the top tax rate hits, I'm just going to stop making money. And if I keep making money, I'm going to buy a bunch of deep out of the money calls in December and blow out my profits just so I don't pay taxes. That'll be my way of protesting. Anyways,
Well, just give it away.
Yeah.
I've given a lot away via the Bitcoin thing, and
you can set up a charity, and I'll donate money to you, Dr. K. And then I'll do the same. You can do the same for me, and we'll both limit our tax liability. Sounds good. Kind of, greasing it back and forth. Anyways, gave you guys hopefully some reasonable ideas. On the short side, I don't know really. I was picking off some things yesterday that were tactical plays. Tesla got hit at the 50-day line. Earnings are next week, I believe, but they're also going to deliver their Model 3s tonight. Big deal, all 30 of them. I don't know why that's such a big deal, but this actually is setting up in a shortable spot. So it stays on my short sale watch list. Google, shortable at the 50-day line. It looks like a double top busting the 50-day, and that's about it on the short side. I don't have a huge amount of names that I would say look like really ripe shorts. The only thing I can see are stocks that I've previously been long that got hit, and I just reversed to the short side of them on a tactical basis. In other words, just take a quick downside profit and then cover like I did this morning in these names when we gap down, and then hang out and see where the next low risk entries are on these. But for the most part, I don't see anything on the short side. So anyways, thanks for showing up, you guys. I don't have anything else. You got anything, Dr. K?
I think we're good on this side. Just remain fluid, because this is that kind of market environment also where it gets frothy. Like we saw yesterday, that was a very frothy gap higher after how many days? It was something like 12 days. It was basically up on the NASDAQ. So those kinds of statistics still are meaningful in this market environment, and you can also use your stocks as your monitor guide, because look how fast leading stocks came apart yesterday when the market started to sell off. When the markets were off, I think, what was it, 0.4%? A lot of leading names are already off 2 or 3%. So that's kind of your warning to clear the way.
It comes very fast. That's why I'm saying you have to be alert, and you have to be ready to move if you have to, because I think that at some point, and I'm going to say sometime before October, we're going to get a real doozy of a sell-off. That's my thinking. But that and 650 will get you an expensive cup of coffee at Starbucks, which, by the way, is getting whacked today, isn't it? Yes. Yeah, look at that. That's brutal. Looked like a Head and Shoulders though before. So anyways, all right. Well, that's all we have, you guys. Thanks for showing up. Have a great weekend. We'll catch you next week. Ciao.
So everyone.